Good morning. Welcome to IG's early morning call. It's Tuesday, the 13th of February. Let's take a look at the headlines as we await what looks to be a mixed start across the European markets. But the Nikkei 225, another all-time or near all-time record high up at levels not seen since the back end of 1989. We've seen those markets continue to add weight. In amongst some of the other headlines we got UK jobs having broken, with the unemployment rate going down from 4.2 to 3.8%. But nonetheless, we've still got high levels of average earnings, which will be of concern to the Bank of England. And the end of the markets mean that we've got on Wall Street yesterday with ARM Holdings up at almost doubling its share price in the space of a week on expectations of better news coming through on artificial intelligence. Let's take a look at what's happening in the market moves at the moment, and we start off with what's going on with volatility as we see that uptick that we saw in yesterday's session being held onto, with the markets up now at 1498. Now, this is still relatively low, and in fact, what we can do here now with the three touches on that little move lower, you can see that we still are capped out at these low levels. But nonetheless, with that move up, we now have a little bit more negativity coming through. At the London markets, now at 75, 71, we're now officially down on from yesterday's cash close, only by a few points. But nonetheless, that recent losses that we saw on the London markets continuing to impact on what's happening on the FTSE 100. German DAX, not too far away from those recent record highs that we've seen on the index. The intraday high that we saw at 17,066, currently trading just 8 points below the 17,000 level, but nonetheless holding on to much of the gains that we've seen recently. French CAC 40 indicating a slightly lower start to the trading day today, but it's still overall very mixed in what's been happening. Let's take a look at what's been happening in the Asia Pacific markets with the close of the session, with the Nikkei up very strongly again. The Topics Index up 2.1%. S&P ASX 200 trading down on what was overall a mixed session. But I want to focus in on what's been going on the Nikkei 225. I want to show you this chart here. This takes us all the way back to that high that we saw in 1989 at the back end of the year, where the market was at 38,957. Currently trading at 38,176. So the market's indeed in today's trade off the highs, but not too far away now from an all-time record high. Let's look at what happened at the back end of trade yesterday on Wall Street. As at the close yesterday, we saw losses on the Nasdaq, losses on the S&P 500, but the Dow Industrials managing to eke out gains. One of the big movers on the markets was this. This is ARM Holdings. Now, it trades on an ADR in the US markets. The American Depository Receipts up for a fourth day in a row. And this gain that we've seen is 98% up from the lows that we saw just before the release of earnings on Wednesday last week. And this has been a tremendous run on these ADRs for ARM Holdings. The chip designer has seen its stock move up after financial results last Wednesday. It showed demand for AI-related technology is boosting its sales. Chips designed by ARM already power almost every smartphone in the world. It was taken private by Japan's SoftBank in 2016. It returned to the stock market last September on the US on Wall Street. It comes, of course, as a chip maker. Nvidia seen its shares more than triple in value in the last year on soaring demand for its AI chips. So let's take a look at what's been happening with some of these indices, with record highs on the Dow that we saw. In fact, there was another new all-time intraday record high yesterday at 38,935. 38,797 is where we're trading at the moment. If we close at these levels on the cash session, it will be another all-time record close for that market. Not so much upside for the Nasdaq, but in fact, as of yesterday's intraday, we saw a new all-time record high, but we've pulled back from that. First time above the 18,000 level, 18,045, currently trading 120 odd points short of that record high. But you get the picture that if for every move up, there seems to be a little bit of a move back down again as the markets continue to regroup. But the bottom line is things are doing particularly well. Now, let's take a look at some economic data that we've seen out overnight. I want to focus in on what's been going on in the Australian markets, because Australian consumer confidence has improved markedly over the last month or so. This is the Aussie dollar. Now, the Aussie dollar is down against the US currency at the moment, despite the fact that Australian consumer sentiment rebounded to a 20-month high in February. But the NAB business confidence remained relatively low and subdued. Concerned still about the high levels of interest rates at 4.35%. There had been fears that the Australian Central Bank might have to raise interest rates again, but it's looking less and less likely as we see more economic data coming through, suggesting that there is a weakening in the overall picture for inflation. So the Aussie dollar down, but not by a massive margin in today's session, despite the fact we saw a big improvement in consumer sentiment. Talking about consumers, let's talk about what's been happening with UK jobs, because the jobs picture in the UK continues to improve. The unemployment rate has dropped from 4.2 down to 3.8%, but average earnings still relatively high, down from 6.7% that we saw in the last time we saw this market produce numbers 3 months ago. This is in the 3-month period between October and the back end of last year, up now 5.8%. But down from 6.7%. This is still an alarming number so far as the Bank of England is concerned, despite the fact we saw Andrew Bailey yesterday, the Bank of England governor, talk about the fact that the overall picture in terms of recession may be over, and we should look more favourably upon growth according to Andrew Bailey yesterday. I want to show you what's happened with sterling. Look at the rise we've seen in sterling in today's trade, but right at the top of the candle at the moment at 126.55. Let me show you the 10-minute candles just to show you what happened in the immediate aftermath of the release of that data. You can see quite clearly the extra weight being added by the sterling trade against the US dollar. Let me just go back to the daily chart to show you how this relates in the grand scheme of things. We're currently trading levels there not seen now since the 2nd of February this year. So extra weight being added to sterling as a result of the jobs data out this morning. I think that push higher is on expectations, perhaps maybe that the Bank of England still has no alternative other than to keep interest rates high to try and continue to dampen that strong wage number. Now, later on today, we got the German ZEW number due to come out. The ZEW Economic Sentiment Index for Germany is due at 10 o'clock this morning. The index is expected to rise to 15.3. It rose by 2.4 points to reach 15.2 in January this year, surpassing market expectations. Will we get that again today? Another strong number. Doesn't seem to be much hope for the euro. We've seen the euro down heavily yesterday against that stronger US dollar. We are trading ahead of the US CPI data out a little bit later on today, which will be the next big number to watch out for. In the US at 1:30, CPI data will be released, and prices are forecast to rise 3.7% year over year and 0.3% month over month. That's from 3.9 and 0.3%. In the previous reading. Consumer prices on the core level expected to be 0.2% and 3.4%. So there is an easing of inflation, and this is part of the general picture of allowing the Federal Reserve to cut interest rates, possibly now at its May meeting. Now, let's update you as well on what's been happening in some of the corporates out. Just one company of note to watch out for this morning when the European markets get underway, and that's TUI, looking particularly strong in terms of its numbers out this morning. Record revenues up 15% to 4.3 billion euros. The company says across the business they're getting some good numbers. Hotels and resorts, cruises and airlines all delivering significantly improved results. Since the start of the year, the company's share price, though, has fallen 11%. But look at what happened yesterday on the share price chart that we got. That big strong day yesterday at 578. And there could well be some more weight added to that because of these numbers out this morning for the interim management statement by TUI. Now, let's take a look at what's happening later on today in terms of earnings on the US markets. Coca-Cola out with numbers before the bell today. On the earnings front, the drinks giant is expected to report stronger sales and profits growth in the fourth quarter. Revenue expected 10.76 billion, earnings per share 49 cents, net income 2.15 billion. Analysts also expecting a very strong general comment from Coca-Cola. Investors will be keeping across unit case volume to see if consumers continue to accept higher prices from inflation. Inflation has pushed up raw material prices, and these are being handed on to many of the Coca-Cola customers. We saw this recently from PepsiCo, and the company saying that customers just aren't willing to accept higher prices. And Carrefour recently suggesting to Pepsi they're not prepared to put their products on their Carrefour shelves with those higher prices. So a lot of these companies are having to absorb some of the prices themselves. Coca-Cola share price, I want to show you what's been going on there. This is an all-session stock, and you can trade this when the company reports earnings. It closed out yesterday at 59.55. That's where the stock will open at 9 o'clock this morning on the IG platform ahead of those earnings. Then it's the turn of Airbnb after the close of the markets tonight with its results on Tuesday. The company is expected to post quarterly earnings of 69 cents per share on revenues up 13.5% from this time last year at just over $2.1 billion. Now, the stock of Airbnb, as I said, all sessions as well. In yesterday's trade, we saw this leap to levels not seen since the 4th of May 2022 as the company continues to recover. We were off the highs yesterday, below the highs that we saw achieved back on the 28th of July last year. So we're awaiting The earnings out, I think it's after the bell tonight, and we'll look for those to give an indication as to what's going to happen next. The stock will open at 9 o'clock this morning on the IG platform. Another one after the bell this evening is Lyft, the ride-hail company, coming through with its fourth quarter results. This is after the market closes. Revenue expected to be pegged at $1.25 billion, indicating a 3.6% year-on-year rise. While oil prices are likely to have led to elevated operating costs, this is the problem with these companies that have to absorb high raw material costs. And Lyft, if you look at yesterday's share price on the way down, closing out at 12.45, this will open at 9 o'clock this morning UK time. It's an all-session stock on the IG platform, and you can trade that after the bell later on today. Now, there are some other companies due to report earnings. Robinhood Markets we've got on Tuesday. Today, Cisco Systems and Kraft Heinz tomorrow. Then on Thursday, it's the turn of Coinbase. I want to show you the Coinbase share price chart because there's an interesting development in the crypto space in the last 18 hours or so. This move up that we've seen for Coinbase is ahead of the earnings out on Thursday. It's another all-session stock. It reports after the closing bell. This comes as Bitcoin comes and climbs up over the 50,000 level for the first time since the back end of 2022. And you can see the big gains that we've seen in the price of Bitcoin since those lows. Let me just extend that up so you get a better idea as to what's been happening. That 225.4% rise. And if you want to capture any further gains in Bitcoin and you don't have access to this, which a lot of people don't on the markets because they don't qualify under the rules of the FCA, that you can use proxies like Coinbase to get some benefit from all that. Staying on the charts, just want to update you as well on what's been happening in some of the areas of the market. The oil market, this tension between demand and supply continues. We've now got a little bit of a rise again in today's session on expectations of tightened supply because of the geopolitical developments in the Middle East against some weakening of demand in some areas around the world, especially in China. Quick update for you what's been happening with spot gold. It up in today's session, but only after 3 days of declines. One other area of the markets followed up on is what's happening with the price of some of these big base metals. I beg your pardon. Let me just quickly update you on what's been going with copper, because copper is up for a second day today quite strongly, up at 83.08 off the recent lows. Is this a recovery in the market? I suspect possibly not. It could well just be another false move up in what has otherwise been some recent declines. This decline we saw down on Friday was to levels that we've not seen since the 13th of November. Now, these lower lows concern me from a technical point of view. I'd want to see a really big recovery on from where we are to persuade me that copper is on its way up again. You can see in the longer term chart, it really is just sort of bumping along the bottom. That's it. We've got 15 minutes for the start of today's European session, looking for losses pretty much across the board on the European trading day, certainly here in the London markets, as we see a stronger than expected number coming through on the UK average earnings, which continues to worry the markets about the upside potential for UK interest rates. Sterling certainly benefiting from the numbers that we saw out this morning. We'll be back at 10:30 with Charting the Markets. In the meantime, watch out for TUI, the company worth watching at the start of the day's trade after somewhat better than expected earnings in its recent interim management statement.